that the US is the most indebted country as a percentage of world GDP in all recorded history. No other country has been 100% of world GDP in debt. That's terrifying.
Hello everyone and welcome to the Daily Crypto. Today we have with us the CEO of Real Vision, Raoul Pal. Keep watching till the end because you don't want to miss out on potential money-making ideas. But before we get started, let's take a look at the Fear and Greed Index for today. As of recording this video, the F&G index is at 20, slightly lower than yesterday's 21. Currently, Bitcoin and Ethereum are trading for $20,200 and $13.89 respectively. With that being said, let's get started with the video.
Bond market liquidity is basically as bad as it was in the peak of the pandemic when the bond market froze and everyone was worried Citadel had gone under, whoever had gone under. That's how bad the bond market is now. It is completely decoupling from anything, and I'll come on to that in a sec. The next chart, another way of looking at it, is bond market volatility. Bond market volatility is higher than stock market volatility. This is not normal, and again, we're approaching the peak of the absolute crisis when the entire world shut down and we thought everybody was going to die. Right? That's how bad the situation in the bond market is. What that's done is decoupled the bond market from the underlying inflation story. So this is not a fear of inflation, really, because the Fed are saying we're going to do anything to kill inflation. Well, what's happened is the break-evens rate has agreed with that and said, yes, inflation is not the enemy. And break-even inflation, I'm looking at the 5 years, is at 2.4%, which broke down today. And 1 year is at 1.95. So they're basically around 2%.
The bond market has been a leading indicator of recessions in the past, and it has started to catch the eye of financial analysts once again. Bond volatility is at its peak as the Fed has increased rates by 75 basis points 3 times in a row now. The last time we saw something like this was in COVID days when economies tanked all of a sudden and the entire world got shut down.
Real rates have been trending lower over time. This is 5-year real rates. They trend lower because of debt and demographics. So you need to have low real rates to stimulate the economy or run it normally. So the trend rate of real rates is actually negative 1%. But we've just seen the fastest ever rise in real rates in history. So you're raising real rates on people at a time when they can't afford to service their debts because there's too much debt out there. So it's creating chaos in the bond market because the Fed have essentially gone too far with this whole mechanism between how the banks can use their balance sheets, plus quantitative tightening, plus raising the Fed funds rate. And the market's freaking out. So it's decoupled from the fundamentals as well. So the bond market, Claire, if you bring up the next one, which is the ISM and the bond market, are tied at the hip normally. Basically, bond yields go down when economic growth is falling because growth and inflation fall, and that's right. What's happened is bonds are pricing an ISM now in the 60s, high 60s, when the ISM in the next month is going to cross 50. So the ISM is going to be pointing to recession, which we all know is happening from almost every single guest we've had on, yet the bond market is broken. So it's saying the opposite. Now, we've seen a few episodes similar, but this is the furthest it's ever been from the business cycle in bond market history.
Real rates have been trending lower for the past 5 years, but this time, they've started to bounce back up, which is really dangerous amid all this financial chaos we're in at the moment. People will start to default on their monthly payments, and in turn, a domino effect will be observed where individuals and institutions will go bankrupt.
There's 2 games at play here. One is those guys who want to be Volcker, and they're having their day in the sun. But in the background is a much more powerful group, and that is the politicians. The politicians are the ones that actually set policy. When the politicians decide that economic growth has gone too far, they will change the game. And I believe that. And that's where quantitative easing, direct handouts, and other stuff to alleviate the pain that's going on. They can't have mortgage rates like this for very long before unemployment starts coming and this becomes a big problem for the Biden administration or whichever administration in whichever country you've got to deal with. So therefore, the propensity for there to be, if this trend continues that we're seeing, there is a propensity for the market soon to start pricing in, somebody's going to have to step in here, much like they did in 2020. So that is still remains my view, is the politicians will end up pushing the Fed around. I think the Fed have created this by fighting the wrong battle, because the battle they remember was the battle that their heroic hero Paul Volcker fought. It ain't that battle. They're fighting the wrong thing.
Raoul Pal believes the politicians are extremely powerful as they get to form policies for the economy, and this is concerning because there is very little they can do now to save the economy. The damage has been already done, and the next elected government will have to deal with it.
Yeah, but I mean, don't forget the equity markets. I'm looking at the Nasdaq's down 30% already. I mean, what more do people want here? Yes, they want 50% because they want blood. Will they get 50%? I doubt it. You know, if we go back to the Volcker era that everyone so loves, is the market was down 27%. If we go back to the 1940s, post-World War II, the market was down 22%. 1990, nice big regular recession. You know, ISM went down to 30. Where did the stock market go? Down 20%. Everyone's convinced, talking themselves into being more and more and more and more bearish. There's a probability, and it's probably, for me, it's probably 30%, 30 or 40% that it makes significant lows, but I think it's 60% more likely that we don't make significant new lows. But let's wait and see. These are, you know, the bond market keeps breaking and we're at 4.5% yields in 3 weeks' time. Yeah, maybe we will.
Since majority of investors are extremely bearish and are expecting the Nasdaq to crash by another 50%, Raoul doubts it. He says there is a slight likelihood of the markets dropping by 30 to 40%, but nothing more than that. Only time will tell what really happens. All we can do is to prepare for the worst.
Well, the one that I've looked at is the Korean won. I mean, it's screeching higher. Well, dollar one is going higher. So, i.e., the one is collapsing. Look, the problems are everywhere. I mean, they're literally everywhere. And the Fed's going, la la la, I can't hear you. I don't think it's really realized, because they're still based on the narrative of we need to fight inflation until they realize they've broken the system. It's like the government's fought the narrative of we need to save the people in 2020. And before they know it, they realize they've broken the system because everything became illiquid and the Fed had to sort it out. There's somewhere within this, something very similar going on here. And it's, again, it's not a, oh, Raoul just wants to see them come back with quantitative easing. I'm like, I think people don't understand the structure of markets with this much debt and the issues you've got. The Fed have never really acknowledged the debts, which is the big thing that they've caused. They've never acknowledged them. It's the elephant in the room. You can't talk about the 1970s and not talk about the massive doubling of debt that's happened since then. You know, again, Americans will never come up and say, they'll talk about the national debt. They'll never talk about the total debt. They'll never talk. Nobody really admits that the US is the most indebted country as a percentage of world GDP in all recorded history. No other country has been 100% of world GDP in debt. That's terrifying.
With the US dollar continuing to increase in strength, Raoul believes this is not sustainable and the Fed needs to do something to fix it as soon as possible. Everyone seems to be ignoring the massive debt the US has to pay, and if it fails to do so, a default is imminent. This could act as a catalyst that takes us into a severe crisis like we have never seen before.
Dollar dies of its death, not of its strength, not of its weakness. Because you're going to force people to do something. Or everyone's going to get together and create a plaza accord, but the US probably doesn't want to do that. So in which case, they'll just do their own thing. And it's not going to happen one day to the next. It's not the US dollar collapses in one go, but over time, trade will migrate elsewhere.
Raoul Pal believes that the US dollar is definitely going to collapse in the future, but it won't be an overnight process. It will be a snowball effect and all the Fed policies will come into play and cause it to lose its value gradually.
We are setting up for lots of opportunity. And for me, it's like, I know it's a kind of worn out expression, but you should be thinking about a shopping list. If you believe in a future of technology, you should be looking at what you can buy and when. Maybe you're a commodity person. Well, they're being thrown out with the bathwater as well. Maybe you believe in the copper shortage story. Well, you should be getting a shopping list out. There are opportunities that are going to come out of this. If there is any form of settling down of what is going on, it doesn't even have to be stimulus. It just can be things settle down, the Fed slow down, everything's returned to normality, there's money to be made. So you need to keep a calm head. You need to see what these headwinds are. You need to see the storms when they're coming and prepare for them, like I am, the physical storm. And then you need to calmly go about what you do. And a lot of that comes up in the academy about how to do these things. And I think it's really important to educate yourselves. If you guys, if you're watching this, you haven't joined the academy in Real Vision Plus, you need to do it. It's the best money you'll ever spend, because times like this is when you need to know what the hell you're doing, and it will help you.
Raoul advises everyone to prepare for the worst outcome in advance because there is nothing that we, as individuals, can do to prevent a financial disaster. People need to learn about the economy so they can stay updated with what their leaders are doing to them. The best solution is educating yourself so you know exactly what to expect when things get out of control in the future.
There's been nowhere to go. Really, you'd have had to become a macro investor and stick your money in the dollar. There's been literally nowhere to go. The average person doesn't know how to short bonds, and that doesn't feel like it's an easy trade to be done. Shorting equities, well, that's not been an easy trade. It never is, because they're so volatile. So it's been really hard for the average person to know what the hell to do. You know, the answer would have been buy dollars and go to the beach. But people look at me and go, well, how the hell do I buy dollars? What do I do?
Yeah.
That's why it's so difficult for people. That's why everybody's getting utterly destroyed. Because before you could buy TLT, but you couldn't in this inflationary environment.
Yeah.
So it's hard. And people have taken the biggest portfolio losses for a very long time because nothing has worked. I mean, every hedge fund I know, some of the macro guys have got like the rates move and knocked it out of the park. Majority, the long short guys, all of these guys have been murdered. I mean, everybody's been murdered.
Everyone who still believes holding the dollar as an asset is a good move are just delusional. The only thing that can be done is to get educated and learn about different asset classes to find the safe haven that will protect them from times of uncertainty. Thank you for watching this video. Please drop a like and subscribe to our channel to stay updated with more educational content like this. See you guys in the next video.